All right, today's rally may be the start of something even bigger. At least that's what FundStrat's Tom Lee says. He says when the market is up 10 to 15% on the year heading into the final month of the year, as we have seen in November, we see December gains 100% of the time. Tom joins us now. Tom, really? 100% of the time?
That's history, so history doesn't have to repeat, but it does confirm, a general view that strong markets end strong. So we've had a great year to date. We're up double digits, I think, in shocking contrast to a depression that we've just gone through. But that also means that December shouldn't be weak. It should really finish strong.
Does history tell us which sectors finish strong?
I think that the consolidation we saw in the last 3 weeks really revealed leadership. Markets were kind of churning, but the epicenter trade, which I guess people call cyclicals, gained almost 20%. So I think as much as I think big cap tech and FANG maybe have a bit of a catch up in December, I think the real fireworks is going to come from the epicenter.
From the so you would belong there. What happens after December? December is a very short time frame for investors. I understand this is called fast money, but January 1st, what's your guess? Are we pulling forward gains from 2021?
I think 2020 pulled forward gains certainly for some future period. So I think 2021 is going to be tricky because I think 2020 was a lot about market symmetry. We fell very quickly and we rebounded really quickly. But now in 2021, that's no longer the case. So I think everything you guys talked about are really important factors, that the economy's recovering. There's probably a renewed expectation of inflation risk. Maybe inflation doesn't happen, but the risk does. But I think that the real story is going to be operating leverage. So I think stocks that can show a little bit of top line, but a huge amount of flow through net income are going to be the real attractive stocks in 2021.
Tom, it's Karen. Thanks for being on the show. And just kudos to you for some outstanding calls this year, multiple times. I got a question, though, about this 100%. Anytime you say 100% of anything, it sort of makes me want to bet the opposite. In that period of time, how many years qualified to set up for that December that you referred to, if the market was up 10 to 15%?
Yeah, there are 75 years between 1945 and today, and of which 13 fall in that 10 to 15% range. And so 100% of the time, you had gains. Now, there are 23 instances where you were up more than 15% year to date, and the markets were up 77% of the time. So if you were to blend all the sort of 10% plus years, you're still going to be in the almost 85% range. But the amplitude of the gain is still like over 3%. So we're talking about 100 points on the S&P.
I love when Karen questions the quality of the data. Tom, I got to turn you to Bitcoin since we've seen this run here. Your forecast is for a triple next year. You stand by that? You want to ratchet that higher given the run that we've seen?
I think that what that triple is based upon is the year after the halvening. So Bitcoin had a halvening this year, and Bitcoin is up almost 200%. So it's had a great year, but it looks pretty textbook compared to prior halvenings, which cut supply. But it's really the year that follows the halvening. So 2017 was a year that follows the halvening. And as you know, that's really when you see the fireworks. So I think 2020 is a little bit more like 2016, where the rally was starting. So 2021 would be like 2017. And as you know, 2017 was a pretty insane year for Bitcoin. And I think something similar could happen.
Tom, always good to speak with you. Thank you.
Yeah, thanks.
Tom Lee of FundStrat. We will have a full write-up of Tom's December forecast, by the way, on our website. So check it out, cnbc.com/pro. In the meantime, let's trade that. 100% of the time, Guy Adami, December is up. You buy that?
The only thing that happens 100% of the time with me is if I applied to Harvard, I would be rejected 100% of the time. That's guaranteed. Short of that, I don't know. Listen, Tom Lee has done phenomenal work. Karen mentioned that, and he's been steadfast in many of the things that he said, and they've all come to fruition. So I'm not going to argue with him on this point. What I'll say, though, to the earlier points, the things that concern me, and I share some of James' skepticism, is the fact that there is inflation. I think BK is being kind. There's inflation in all the wrong places. And, oh, by the way, the U.S. dollar getting torched is inflationary, regardless of whether or not the Fed, Janet Yellen, whoever, wants to acknowledge it. That's very inflationary. And Citi just put out a note a week and a half, 2 weeks ago, saying 20% decline in 2021. Risk assets might go up in that scenario, but the ones who outperform are the resource stocks and the mining stocks, and we've talked about that for a while. 155 quickly into TLT. That is your line in the sand. That probably comes in around 98 basis points or thereabouts.
Yeah, the steel ETF hitting a new high in today's session. Goldman Sachs going full bull on copper and copper's run that we've seen so far. James, you've done some work in terms of historical patterns, and you found not what Tom Lee has found.
Right, and I echo the sentiment that Tom is brilliant at what he does in analyzing these data. I've had the pleasure of sitting on a few presentations with Tom. Inarguable the past, but we've heard the word unprecedented in 2020 an unprecedented number of times from an unprecedented number of people. All types of records have been broken. We've seen literally records shattered almost every month, almost every week in the data on stocks, in the data on earnings, valuations, GDP metrics, and so on and so forth. And so I am short this market. I am short the S&P, and I will remain short until inauguration. And I expect that this will be the exception of that trend for December to finish positive.
Shepard Smith here. Thanks for watching CNBC on YouTube.